Knowledge is power. Make an impact by learning more. Call us right now for more help at 866-945-8070. Good morning and welcome. Where'd Sarah go? She went to go pick up her kids.
No, her camera's still here.
I know, but she left.
Oh,
she's gone. She went to go get her kids. Okay, so we're letting some people in. There's Sarah. And we'll give it another minute so we can just talk amongst yourselves. I have 40 seconds until my coffee's ready, my French press. So I haven't quite fueled up yet this morning. 30 seconds.
I had a question for Mike. Do you think things like Bill.com has increased the velocity of cash flow in terms of people wanting to get paid faster, and you can't really use the float as much as you used to be able to?
I think Bill.com has slowed it down.
Say again, Seth?
I think Bill.com has slowed it down because it takes forever to clear a payment with them and I get it, it's because of all the security, but it doesn't change the fact that it's, if I want to, it'd be faster to overnight a check to somebody. Let's put it that way.
Yeah, and I'm more inclined to say that financial institutions have sped it up and gotten rid of it.
Yeah, financial institutions definitely. If I do ACH, it's in their account next day. That I agree with. But Bill.com, I think if anything slows it. I have a hard time getting people to use Bill.com to pay their vendors for that reason. They're like, it takes too long. Even with ePay, it takes too long.
It just seems to be the expectation of a creditor is that you should get paid a lot faster than, say maybe 10 years ago, where you'd have terms and discounts and that kind of thing.
Well, and with the kind of fees you're paying to a service like Bill.com, right?
Yeah.
That also, when I'm paying what I pay, I have an expectation that I've formed. I want what I want. It's funny because I was thinking about this morning, specifically because I had a conversation with somebody yesterday about what the best way was. This is a franchisor with many franchisees, and there's a lot of movement of cash back and forth between the two. Sometimes the franchisor has to send money to the franchisees, and sometimes it's the other way around. And, in the end, we were talking about Bill.com, but what I settled in with them, we're going to migrate. Their home office is still on QuickBooks Desktop. We're going to migrate them to QuickBooks Online. We're going to standardize it so that every franchisee is in QuickBooks Online. And then I told them that the easiest and fastest way is to just use QuickBooks Payments and send invoices between so that the whoever has to send the money just clicks the link on the invoice to transfer the money. And that's the fastest way, because that way the money with QuickBooks Payments, when I get that notification that somebody's paid one of my invoices with QuickBooks Payments, the money's in my account like a day or two. Mm-hmm. And with Bill.com, it's at least 3 business days before the money gets in. And it often feels like it takes a good week to get the money. So that's my rant about Bill.com. I love their service, but again, I'm not a fan when it comes to how I don't like to wait. And this is what I was thinking about earlier this morning. It's like you have to think of it like this. We live in a nation and really in a world of addicts who want their fix now, right? I don't want to wait. When I click on something on the web to go somewhere, as soon as I see like the little hourglass thing and I'm waiting, I immediately go click somewhere else. I'm like, I have no patience for this. And I move on and then I come back later to it. There's zero patience. Mike, would you agree?
Yeah, no, I absolutely agree. I mean, I'm that way now. I mean,
right. No, it's true. There's no patience. I don't want to wait for anything. I want what I want when I want it, and I want it right now. I do not want to wait. I hate the fact that I have to wait to get my money when, my client in good faith and conscience has done their part to try and get that money to me. But then the intermediary, right? That's what Bill.com really is. They're a financial intermediary. They slow it down, right?
It's funny. It isn't just about money, Seth. I mean, if I want something, I just go buy it. I mean, my grandmother hates that because she can't buy you anything. You already have it. If you want it.
My wife says the exact same thing to me because she's like, I can't. Yeah, it's the exact same thing. She says, my birthday's coming up. It's Sunday. And my wife always tells me, I don't know what to get for you because you just get whatever you get. It's Amazon, right?
Yeah.
And here's the funny thing. So speaking of Amazon and the speed of cash or the speed of a transaction or the speed with which it takes to get what I want when I want it, we have, Best Buy. What were people doing for the longest time? You'd go into Best Buy with your mobile, right? You'd shop around, look for stuff, and then go and buy it on Amazon with your app, right? Because Amazon would often have it for cheaper. So Best Buy got smart, and they started doing price match. So now if you're standing in Best Buy and you're looking and you see it cheaper on Amazon, all you have to do, it has to be a brand new item. It can't be used, of course. But if you show them a brand new item on Amazon that costs less than what Best Buy has it for on their shelf today, they will match the price, which means now Best Buy is a much better bet for an addict like me because I don't have to wait the 2 days for the shipping. I can walk out of the store with it today in my hands and start playing with it, right? So Best Buy has gotten smart that way. We got some more peoples to add in. Peoples. Kelly says, I find it takes 4 days for money to be available with QB payments for ACH. Do you pay a fee for QB payments? I do pay a fee. I think, isn't it like $18 a month? And then for ACH, it's free after that. But I think everybody pays $18 a month for QuickBooks payments.
I don't know if it's called payment. Whatever I have, I don't pay any fee. But I get free as long as I don't use credit card. It's just a free ACH transfer, and so I deal with the delay because then I don't have to pay any fee for it. So I just was checking to see if you had a.
Yeah, I'm pretty sure I pay a monthly fee of $18 to them. But then it's the same thing. ACH is free. Credit cards, I get charged a fee, for each transaction, a percentage or whatever. But I do that anyway because I get a lot of my payments. I get very few payments through QuickBooks Payments anyway because I rarely invoice people. It's just there in case I do. But so most of my payments come in through WooCommerce and where I'm using Stripe and PayPal. And I'm getting sick of PayPal. So Stripe charges me the 3.5% or whatever they charge. I don't mind paying it because I want my money now. I don't want to have to chase people for money, which is what I have to do as soon as I start relying on them to send in checks.
Yeah.
So speaking of chasing people for money, we have a very special guest with us today. Mike Milan, not that you have to chase Mike for money. Mike gives away money freely. He wires money into my account every single day. No, I'm kidding.
Mike, you look like you're in the dark.
Yeah, I don't know what's happening in Seattle. It's gloomy here. I'm sorry.
Yeah, it's cloudy.
So I don't know how many of you may have caught the sneak preview that I put up. I kind of got it up late in the day because I had a million things going on. Go figure. But I did get up a sneak preview of what Mike and I are going to be talking about today. And one of the things that's so cool that you're going to see in a little bit, I think anyway, one of my favorite takeaways from my brief call with Mike yesterday was, first of all, you missed it. Mike was lumberjacking it yesterday. He had the most awesome shirt on. But secondly, and you can catch the video if you want to see what I'm talking about. But no, more importantly, we started talking about cash flow management tools, right? Like Bill.com has a little cash flow management thing where it will analyze your receivables and payables, and you can go into this cash flow tool where you can change these sliders to see if you pay something later, it'll improve your cash flow because you'll keep money in your account for longer. But anyway, the problem is, and I mentioned this to Mike right away, is that we have all these tools that assume that everything's going to get paid on its due date. Right? And how often does that ever actually work out to be? Right? Never. Does it ever end up getting paid? Some people pay it sooner. Most people pay it later. Right? So, Mike, I'm going to leave everybody with that and let you take away. I'm going to shut up for the rest of the hour. It's all yours.
All right. Well, basically what we were talking about, Seth, is really, and I'll just start there. What we're talking about is a cash flow projection, a cash flow forecast. If you guys know anything about me, I know Dennis has been around, so has Sarah. Sarah, we met quite a bit and talked about it. I focus on cash. Finagraph, that's what it was. It was focused on cash. That's what our new product Flight is about keeping cash in the company and putting more cash in people's pocket. But the thing is, most people don't understand how cash moves through their company. So I came up with, just the idea of the speed of cash. How fast does a dollar, once it leaves your pocket, come back to you? And what I mean is maybe you buy a piece of inventory, maybe you're buying your own things for sorry, I got a phone call all of a sudden.
You want me to get that? Just forward it to me. No, I'll take it. I'll take your calls.
Take your calls. Good. Anyway, what we're talking about is how does cash move through the company and how fast does it come back to you? Now, what most people don't understand is how cash is moving. So what you've described, Seth, is the idea that cash flow calendars or cash flow projections that are out there right now today, they go off the invoice date and then the due date, right? And they say, well, if I create an invoice on the 1st and it's net 30, I should get it 30 days later. Well, again, just like you said, that doesn't happen, right? So what we've done is we've built into Flight now, and it just launched this week, an algorithm that individualizes every single vendor, every single payment that you make, but we analyze your payment behavior, which is if you've got customers that pay in 22 days, we're going to be able to predict within a 2 to 3 day window of when that should come in. If you've got somebody that pays in 60 days, even though it's net 30, we're going to be able to project out that you should expect that money within 60 days. And of course, it's always updating and it's always keeping on track to what's happened actually. The other thing that we do, Seth, is analyze your own payment behavior. When do you most likely pay your cell phone bill or your internet bill or your QuickBooks bills? And we can see those transactions happening in your QuickBooks file and be able to project out, hey, you're going to be short on payroll in 2 weeks based on the amount of money we see coming in versus what you normally have going out, and be able to put you in a position to see that before you have to write a check that's bad. So good. So anyway, do you want me to kind of just talk about the speed of cash? Like, if you want to, I'll do some education and we'll go right into the product on how you can use it.
Yeah. Some of the stuff we were talking about yesterday, I think was really interesting. We only had a couple of minutes to spend yesterday. So yeah, I'd love to go more in depth on some of that stuff. Again, the idea of a product that actually has the intelligence that should be available, right? You can plug into my QuickBooks Online file, read the patterns of my customers and how they typically pay me, how quickly they typically pay me, and actually do a projection based on patterns and habits. Makes a lot of sense, right? It's like, why hasn't anybody done this before? But there is some other stuff we touched on also yesterday, but maybe it makes sense to get into the product or do a little bit of the education, because then we'll kind of naturally get into that. Because there's the other stuff too. There's the fact that I want to be able to identify, which of the clients are taking longer to pay so I can take action. Because let's face it, when I have a client whose primary struggle is cash flow, the first thing I look to do is find the low-hanging fruit. And usually that is, where are the receivables that are past due, but not too far past due, the lowest hanging fruit that we can go make some phone calls and collect money right away, right? And then in the bigger picture, I want to be able to identify the clients who habitually take a long time to pay, and be able to implement processes where I can follow up with those clients and say, hey, client, it's taking you on average 45 to 60 days to pay. Our terms are 30 days. What do we need to do to, get you to pay us faster? It's affecting our cash flow, and we want to be able to continue to provide you with an excellent service, but that gets harder and harder to do when our cash flow is being squeezed, right? And those are the kind of conversations we want to be able to have with our clients. And Mike, based on what we discussed yesterday, it sounds like Flight gives us an amazing platform through which to do that. Just all of it, identify it and follow up.
Yeah. Okay. So, let's kind of just start there. What I'm going to do is I'm going to start high level and then bring it down to how you can use Flight to make the high level stuff work. I'm going to share my screen, Seth, and I got just a few slides I want to go through.
Perfect.
If you don't mind.
Let's do it.
Let's see here. We got this one. Share screen. And let's see. Can you guys see that?
We sure can.
All right, great. All right, so basically what I'm talking about is the speed of cash. And normally when you talk about speed, Seth, you're talking about miles per hour or things like that. Well, in business, that's not the way it works. It works in days, right? And that's why, a lot of people know about AR days or AP days or, inventory days. They know those numbers. They don't know what to do with them, right? They just measure it against it. Maybe, my competitors have 60 days of inventory and I have 34 days, so I have less inventory, or my inventory moves faster. What I want to do is show you something else, something that shows you whether or not you have enough cash based on using those numbers. All right. So real quickly, because this is funny to me, I always ask accountants, and if you've heard me talk, you've seen this before, but when I talk to accountants, I say, listen, what business are you really in? And then I always say, hey, I'm in the grandpa business. If you go to our website, that's a picture is actually on my website. That's my granddaughter, by the way. I just thought it was funny. They said bring something in that's important to you, so I brought her.
That's awesome.
She didn't get all the hair or the blonde hair from me, if you can tell. So, no, in reality, you guys are in the dream fulfillment business. And the way you do that is by helping your clients stay in business, right? That's your job. Your job is to help them stay in business. And what we're trying to do, our new mission not a new mission, but our stated mission now as Finagraph is we want to eradicate cash flow problems as a reason that businesses fail. All right. And the way we're going to do that is through education and through tools, through, free tools or otherwise. Now, Seth, I'm going to bring up this screen because you've talked about the 7-minute conversation. You said maybe that's a good place to start off. It doesn't fit as well with the cash, but it's always a good reminder of these are the things that I think every business owner should know every month. It takes about 7 minutes. When we talk about trends, we're talking about just, hey, what sales, expenses, those type of things. Expense control. When we look at expense control, you want to see the change in gross profit should mirror the change in operating expense. So if I have less gross profit, I should reduce my operating expense by the same. Debt to equity is just a way to measure whether or not this business owner invests in his own company. And it's used by bankers to know. You want that number to be at 2.5 or less, right? So if you look at debt to equity anywhere, you want that 2.5 or less. If you want to know how to use EBITDA, you take your EBITDA times 3, and that tells you your long-term debt capacity. And then misfinancing. So misfinancing is really, did I use the right type of loan product for something I bought? Now, again, this doesn't go into the speed of cash, but I always like to kind of remind people about the 7-minute conversation. I've got some webinars that people, I'll ship out to folks if they want to go through that. I think you saw it. I think I did it at Scaling New Heights in about a 90-minute presentation. So anyway, misfinancing is you wouldn't buy a house on a credit card. That's basically what we're talking about, using the right loan product. But what I want to talk about today is really the speed. The reason why we exist is that 7 out of the top 10 reasons that businesses fail right now is poor cash flow management. So that's what I'm focused on. And one of the things I like to say, the story I tell, I don't know if you guys have heard this or not before, but there was a point in time in 1985 when Home Depot was 21 days from death, right? 21 days. They had 21 days of cash. They had $9 million in the bank. They had a $12 million burn rate, and they were just about dead. And it was because they were trying to follow the Walmart method of grow, but they weren't managing the same things that you and I should be managing in our own small businesses. So it doesn't matter how big you are. You can show profit on the income statement and still not be able to pay your bills. Matter of fact, out of 50,000 bankruptcies every year, about 35% of them have net profit. Right. And that's the reason why we exist, is to say, listen, it's not about profit on the income statement. It's about cash in your pocket. Mm-hmm. So when we talk about speed, I always talk about it's a machine. It doesn't matter what you do out there, Seth. It doesn't matter. If I'm a dry cleaner is just a way to generate cash. Right. Your business is a cash machine. Right. And when I talk about it being a machine, I talk about gears within the machine. And you've got a driving gear and you've got a driven gear. And your driving gear is what I call working capital. And if you want to look for your working capital, you can find it in places, on your balance sheet, such as your accounts receivable, how much inventory you've got, and your accounts payable. Those are the things that go into your working capital or your cash conversion cycle. When we talk about the driven gear, the smaller gear, you want the driven gear. Those things come from your profit and loss statement, such as your actual operating expenses. So that's what we're going to talk about. We'll talk about the driving gear real quick. It's also called the cushion. Some people look at working capital position as current assets minus current liabilities, or it can be expressed in a ratio like a current ratio. But let me just get to the days and how you can use them. This term here, the financial gap, is the most important number that a company needs to know. This will tell you how much cash you should have to fund your operations. All right, and a lot of people don't know this. And I talk to accountants across the country. They don't understand the financial gap. But the financial gap is basically this. You take your inventory days, add your 8R days to it, and then subtract your AP days. That number is your financial gap. Then you take your cost of goods sold and divide that by 365. That tells you how much cash you should have available to fund your operation. So you should have that much or more. And it doesn't have to be cash. It could be cash and line of credit. I prefer to tell people and focus them on how much cash they should have. So a lot of people say, I don't know how much I should have. Well, that's going to tell you exactly how much. So let me show you how it works. When we're talking about the speed of cash, it's how much inventory do I have? Because I take money out of my pocket, I set it on the shelf, somebody buys the inventory, and then I wait to get paid. And that's basically what we've been talking about. The length of time that it takes me to buy my inventory to get the money from the customer is one variable. Then
from the time you paid for the inventory to the time you've gotten paid after selling it, that can be a long time, especially if you have 30-day terms, right?
Mm-hmm. Yeah, absolutely right. I mean, basically we'll say a company has 90 days of inventory, and then they got a collection period of, 34 days. There's 124 days that it takes $1 to come back to you. That's basically what we're talking about. So you take your inventory days, whatever that number is, plus your AR days, that's how long it takes money to return to you. Now, in the meantime, you have to pay people, right? So that's why we subtract out your AP days. When you subtract out your AP days, we'll say in this case it's 56 days. I'm just making up some numbers. Let's say it's 56 days. You take 124 because you got 90 up here. If I got my pen, you got 90 and 124. Minus your 56, I think is 68. So this red here would be 68 days. Let's see here. I think I have that written somewhere. Anyway, it's 68 days of your financial gap. So that is the number, this red part. It's 90 plus, and I'm looking for my pen. Seth, sorry about that. I want to be able to write on there for you.
No worries. Oh, you know what? You can use annotations right in Zoom.
Oh, there it is. Yeah. All right. That works. All right. So say we got 90 days again. Oh, yeah. I'm really good at this.
It takes a little practice. Yeah.
90 plus 56 equals 124, right?
Yeah.
And then we'll say you're getting, 34. Those are the numbers I was using, 34. Yeah, that's terrible, Seth.
Practice that.
56. So anyway, what we're doing is 90 plus 34 equals 124. Then you're going to subtract out your 56. And that should equal your 68 right here. So 68 days is what you have to cover. That means you don't have enough money to cover your expenses for 68 days. That's basically what that's saying. Now, what most people will do is either take their sales and divide it by 365 or their cost to get sold and divide it by 365 and come up with a number per day, right? I need so much inventory per day. Oh, look at you. Now, you're doing it for me.
I'm trying to see. I'm not much better, Mike. I just want to
see. It's not easy. That's why I was looking for my pen. I should have pulled that out ahead of time. Actually, oh, there it is. Here we go. All right, so think about it this way. You got 90 days of inventory, and you plus your 34 days. 34 days collection equals 124. Then you subtract out your 56 days of AP, AR, inventory. That equals 68.
That's slick. So you have a pen that writes on your little pad on your computer to do that?
Yeah, it's usually what I use when I'm teaching because it's a little bit easier to do than, the annotations, things like that. But again, this
Surface, you're using the Surface?
Yeah, I use the Surface. I don't even have a computer anymore.
But that's why you're able to do that, right? I'm just sorry, ADD moment. I was just curious how you were doing that so well.
Yeah, it's a lot easier just to use the pen and write on it. But so anyway, you take your cost of goods sold. Let's just say you have 1,000 per day. You take 1,000 per day. That would be cost of goods sold divided by 365, and you take that times 68. So we got 68,000. This company would have to have $68,000 either in cash or on a line of credit in order to meet its expenses. If it doesn't, it has a gap, right? And that gap would need to be covered by either financing somewhere else. You've got to infuse the company with cash, or you've also got, or expand your line of credit. But most people don't know. They say, they walk into a bank, Seth, and they go, I need a loan, or I need a line of credit. And the banker goes, well, how much do you need? And they go, I don't know. How much you give me?
Right. So can I stop you here for a second, Mike? Yeah. Because I think this is so important. And I know you went through this kind of quick because you have to, because we only have so much time. But I want to stress to our audience, because our audience are mostly accountants and bookkeepers who are serving clients, that when we talk about providing strategic guidance to clients, this is what that looks like, right? This is the kind of stuff we need to be doing for our clients, so that you might want to take the time, watch this recording back, after it's, after today, understand what Mike just went through so thoroughly that you can walk your client through it, because this is the kind of valuable information that clients are dying for. They want that $68,000 number. They desperately want to know, and they need you to tell it to them. This is what you need to have in the bank as your prudent reserve at all times. This is how much cash we need to have at a minimum. Really, that's just at a minimum, not to be comfortable. To be comfortable, I would say how much do you think, Mike? Twice that?
Yeah, well, if I'm going rule of thumb, I want somebody to have, 3 to 6 months of operating expenses. That's just at a minimum, and then people talk about the term war chest. Have you ever heard of war chest?
No.
Yeah.
All right. So a company that has a war chest is built to be able to take advantage of opportunities or fend off threats, like a hurricane down in Houston. Somebody without a war chest is really going to be hurt there. But a war chest is really 18 to 24 months of operating expenses. So if you think about it, you need a minimum of 3 to 6 months. Whoops. Where's it at here? Draw a line. You need a minimum of 3 to 6 months of operating expense, and I'll just call it OE. So if somebody is spending, $20,000 a month, they're going to need, 60 to 120,000. And then your war chest would be 18 to 24 months. That would be of operating expense. So if you're just looking rules of thumb, that's the amount of cash you should have access to, at a minimum. Now, this gives you the exact dollar that you need.
I have a question. So a banker is going to do this analysis and say, okay, well, I don't necessarily want to lend this guy more than $68,000, or that's the bare minimum he needs, or what?
Yeah. If somebody, let's say, didn't have a line of credit right now, say they walked in cold. They don't, and I'm doing that for simplicity. Say they have no line of credit, but then they see that they have a financial gap of $68,000. That business should ask for a line of credit of $68,000. Actually, it'll be $100, because banks like to do lines of credit in round terms like that. So they're going to ask for a $100,000 line of credit, but they need $68,000 just to maintain the business.
So the bank is going to look at your financials, and assuming your financials are semi-valid, if they get a bunch of trashy financials, that's going to really throw off the analysis, right?
Well, yeah, of course. You guys know that. And what they're going to do is they're going to try to triangulate. What a bank will do is that there's three ways they verify a company. They got your tax returns, they have your financial statements, and then they have your bank transactions. And somebody can commit fraud on one or be terrible on one, but they're not going to be terrible on all three, or they're not going to be able to commit fraud on all three. So that's why the banks will ask for all three of those things: tax returns, bank statements, and financial statements, because that's how they do verification. Does that make sense? Now this simple calculation right here, this inventory days plus AR minus AP, folks, I teach that to bankers, right? That's exactly the formula they use to determine how much money you need to run your business.
So you could basically be the banker before they go to the banker, right?
Yeah, exactly. Think about this. Getting a loan is being able to tell the story, and you tell the story in all different ways. You tell it through, first of all of your financial paperwork. But secondly, it's being able to say, I know my business so well. I know exactly how much it takes to run this thing. And the way you do that is say, listen, I've got 90 days of inventory. My customers will pay me in about 34 days, and I'm paying in about 56. Based on that, I need $68,000 if I look at my cost of goods sold of $1,000 per day times my financial gap of 68 days. That sounds a lot better than, I don't know how much you think you can give me. Right? Because
well, I would be inclined to, make the loan, because this guy he's speaking my language.
Right. No, but the reason I laughed when Mike just said that is because that's how most business owners go into the banks. Is, I don't know, how much can you give me? If you go in with this kind of analysis done and prepared, like you just said, Dennis, the banker's going to have a lot more confidence that you know what you're doing, you know how to handle this stuff and manage this stuff. Because ultimately, what does the banker care about at the end of the day? One very simple, basic thing. They want to make sure they're going to get paid back.
That's right. Yep. They want to know. They want to give you today's loan and on tomorrow's money.
Mike, can I ask you? So, if you're a service-based business, non-inventory, you would replace that with your operating expenses, then essentially. Right?
No, you're going to replace this. First of all, you won't have an AP.
Yeah.
All right. What you'll have is payroll.
Okay.
All right, and let me see if I can. I don't know if I can erase it now.
So they don't care about AP for your operating expenses. They only care about AP for inventory, is what you're saying. And same with AR.
Well, AP to a bank is only your inventory, right?
Okay.
You got to think about it. To them, they think that the correct way is that your cost of goods sold and your AP should be, the actual transaction. When you sell a piece of inventory and pay for it, your AP should just be your inventory.
Okay.
Right. But most businesses, that's not really the case because they're putting all their operating expenses through AP too, because they get a bill, they enter it, and they're going to pay it in 30 days. And that bill could be for their electric,
Well, and okay, so that's where
what you're saying is bookkeeping-wise.
Yeah, bookkeeping-wise.
Like bookkeeping-wise, you really need to keep your inventory-related AP separate from the rest of your AP, at least if you want to really make your banker happy.
That's right. That's right. To them, their AP, that means your inventory. All right.
Okay.
Now, what Sarah asked, all right, so what some people know about me is I built a hotel staffing company. So instead of inventory, I had zero inventory, but I did have AR, and we'll say I got paid in 45 days. All right. How much should I have on a line of credit? That's what people would ask. How much should I have if I'm in a service-based company? I'm not going to have AP because I don't have inventory, but I do have payroll. And in my case, I paid every 2 weeks, right? So think about that. If I got paid in 45 days, that means the hour that was worked in January, I didn't see the dollar from the hotel until mid-February. But in the meantime, I had 3 payrolls I had to cover. That makes sense? So if you look at it, I got day 1 to day 45. I had 2 weeks, 2 weeks, 2 weeks. So I had 1, 2, 3 payrolls to cover. Let's say that I had $100,000 in payroll. How much should I have as a financial gap? How much should I have available?
Oh, $300K at least.
$300K, right? And that's how you do it in a service-based company. You say, okay, well, how much is my payroll? How many payrolls do I have to cover before I get paid? And that's the number, 300,000, that you should have.
And just to connect the dots for people on this, it's a weird way to think about this, but it's what Mike is really underscoring here. The reason for this thinking in a service business is that in a service business, your laborers, the people who work for you, in a sense, they're your inventory because your product is whatever's being produced by the time that they put in, by the efforts that they put in. Your employees are, in effect, your inventory that you're just turning over. They're producing the work product. So that's the reason for this analysis on a service-based business, because your payroll is going to skyrocket compared to an inventory company because again, it's almost like your laborers are your inventory.
I had a client one time who was a catering company, and he was actually doing quite well, gross sales, but he went out of business because he had to pay the money up front for the food and the service, the renting people. But he'd get stiffed. They'd take, 2 to 3 months to pay him. So what ended up happening is that he was always overdrafting his bank account, and he was commingling his the sales tax in there. So he was spending trust funds at the same time. So he basically went out of business because he didn't have enough working capital to cover, the delay in getting paid from the hotels and the companies he catered for.
Right.
Oh, wow, yeah.
And the other thing that'll take a profitable company and put them out of business is if you're way too highly leveraged, right? Because a highly leveraged company can show a nice profit on paper, but they have so much debt service that isn't reflected on the P&L because we're reducing a liability when we pay for that, but it's a big impact on cash flow that, again, like Mike said earlier, it's lack of cash that puts companies out of business, not lack of profits.
Plus, it's a fixed cost.
Oh yeah, absolutely. Yeah, absolutely. All right, so
So 300K is what you need for a payroll model like this, assuming that it was a service-based business.
yeah, and again, that's either in cash or access to a line of credit or a combination of both, right? That's the number I'm looking for. Some people just don't know that.
Right.
The thing I want to tell you, Seth, is that number there, this financial gap number, you want that to be as small as possible. So when I talk about driving gears, you want that to be small, right? Because it spins fast. So you want that number to be small. So if it's a 68, you've got three levers here. I can reduce inventory, I can get paid faster, or I can pay slower, right? So in this case, probably I can only
going to be the most likely one that's where you have the most control.
That's right. That's right. So, but I got three levers, and I want to make it as small as possible. So I would probably reduce inventory in this company to get that down. Because if this number is smaller, 68
then
days, then I need less money to live. That's right. That's exactly right. So, okay. Yep. Good. Hey, the other names. So those that was inventory days, AR days, AP days. There's another days that people.
Happy days.
Yeah, happy days. Let's see here. The other, oh wow, that stays on there, Seth. I didn't know that.
Oh, so if you go back to the annotations, there's a clear option.
Oh, is there?
Yeah, like in one click, you can clear it all. If you
got it,
there you go.
All right, so the other, man. All right, so that's just basically what we went through, right? 90 plus. Why didn't I just use this one?
That would have been easier than drawing.
All right, so
it was much more interesting with the drawing, though.
Yeah. Hey, and by the way, I have it's about a 5 hour. It's 5 1 hour segments. Anybody that's on your call, Seth, I'll give them access to all 5 of those videos. If they want to see me go through this slowly and through real examples, just email me. I'll give them access to those 5 hours, and they can just kind of pick and choose what they want to look at. But all of this,
I want that because I want to actually go through this in a way that, like I said, I want to walk my clients through this. I think it's powerful, and it's one of these things that this is one of the reasons I was so looking forward to having you on today, is because when I saw you present in Seattle and you talked about this kind of stuff, I was like, I need to go through this more slowly myself so I can do this for my clients, because it's such a powerful and valuable thing to offer.
Yeah, well, good.
So send me the information, and I'll, of course, get it out to or email Mike. We'll give you Mike's email address.
I have a question. Is this slide deck available anywhere?
It can be. I can send it. Seth's got it, actually.
Oh, this is the same one you sent me after Seattle?
Yeah. I just sent it as a preview if you wanted to look through it. Again, I wasn't going to go through the whole deck. This is something I did for, I think, VCon. I did this as a whole hour and a half. So
right. Okay.
All right, so the other speed measurement is the driven gear, which is your operating expenses, and then we typically call that days cash on hand, which is I like to call it days to bankruptcy, right? How much money I got before I'm broke, and basically what we're doing is we're taking the cash that we have on hand, divided by your operating expenses, and then divide that by 365. Is how you come up with that number. But again, it's just I have so much days on hand. What does that mean? All right, so what I've done is build just a little chart telling you where you want that to be, right? So here it is.
Like in the startup world, I think what we call this is the burn rate or the run rate. Is that the same thing?
But the burn rate or run rate is converted to dollars per day. This is just saying how many days.
Okay, so it's like a flip side. It's doing a little algebra.
It's just a little bit different. When people talk about runway, they talk about how many days of money do you have left. The burn rate is actually the dollars that you're burning per period.
Okay.
It's all the same. It's just in the way you're describing it, I think of it differently.
Right.
Anyway, this is just, what is good for days cash on hand? I'm telling you, hey, you want that number to be 45 days or more. That gives you about, almost a month and a half worth of cash on hand. Which gives you time to operate, right? It gives you time before you see the income statement and see that you had a loss of $15,000 or whatever the previous month. You can at least live another 45 days. So I like for that number to be there all the time. So you may have, I've seen companies that have 100 plus days cash on hand, and that's wonderful too. But this number here remember we talked about the working capital cycle. We want that number, that financial gap, to be small. This one you want to be big, right? So you think about 2 gears. The working capital is small, so you want it to go fast. You want this one to be big, so it goes slow, right? This is how you're burning money and how much money you actually have. So you think about it that way in terms of gears. That's what you do. And that's why I say, controlling your speed. You want the driving gear to be as fast as possible, which means a fewer amount of days. And then you want the driven gear to be as slow as possible, which means a greater amount of days. So Seth, that's how I measure the speed of cash, is by using those days. Right. That's the best way to come up with it. Now, how do I transition that to actions, right? So, I mean, and if I share my screen and talk about, let's see, stop share. If I talk about flight and how to use that, you mind if I do that for the next
No, well, I was hoping you would kind of, get into that and wrap things up with flight and showing people how that kind of brings this all together. So yeah, just it's your show. Do it, whatever you. It's cool. Hard punch.
Yeah, and I don't want this to be a big sales pitch. I always try, Seth. Every time I try to come on, I try to give you education, try to give you content, right? Because I mean that's what's valuable to me. I just
want to sell things to people.
No. I want to sell things too, though. Yeah, I like doing that too. All right, so if you haven't been to Flight, or you don't know about Flight, Flight is the next evolution of a financial dashboard. The dashboard was an idea conceived in the 70s, made popular in the 80s, and we've all seen it. Matter of fact, Finagraph built one that's really just a wall of numbers, and it's pretty static, and you got to wait for the end of the month really to get any value out of it. And what we noticed is that it was great for bankers. Accountants also, knew it very well. But as soon as they introduced it to the business owner who was maybe less aware of what the terms meant or less sophisticated in the way they ran the business, they just glaze over, right? As soon as you talk about current ratios and things like that, they just glaze over. So think about a dashboard where it goes from the ratio to be interpreted by an advisor to an action. We've went reversed. We say, these are the actions that you're doing every day, every minute, that if it's bad, you're done. We point it out to you and say, hey, this doesn't look right. If you do the right actions, the ratio should follow. So we're taking it backwards. And what happened in January of last year was my boss put me in a room and said, listen, don't come out of here until you've reimagined what Finagraph dashboard is. And we walked out of there with Flight. That's basically what happened. It took about a day and a half. And what we did was say, okay, how can we communicate to the business owner? So you got to think about dashboards as being an advisor's tool. Flight is a tool for the business owner. Right? I want to make that distinction. We've written it in language like a high schooler can understand. We put it in actions that they're already doing, and we only point out the important stuff. So I like to call it, very high signal, very low noise. Right? We're not putting anything in front of you that's not important. So it's not a wall of numbers where you only pay attention to 3 of them. These are the things that we alert you to that are affecting you from a cash flow perspective. So, I mean, right up front, we tell you, hey, it's cash flow that's conquered. And we've done that by, really telling you what's happening tomorrow with your cash. And we do that through a combination of what we call the activity feed and a cash flow calendar. And I'm just kind of showing you the website to do that. But an activity feed, you can kind of see it there. What does that have the look and feel of?
By the way, Mike, all I see is the controlling your speed slide.
Oh, okay. Well, that really sucks. How about?
I think it's just because your PowerPoint is filling up your screen. There we go.
There we go. All right.
I see Flight, getflight.com. Okay.
Yeah, getflight.com is the website. You can try it right now. But if you look at this, the look and feel of Flight, I mean, what does that remind you of?
Facebook.
Yeah, Facebook, right? Because when we were sitting there, we're like going, how do we communicate? And I'm like going, everything across the board has the same type of look, feel, control. From LinkedIn to Twitter to Facebook, we're like going, that's how we can make it mobile. That's how we can make it relevant, is to create a visual that people are already using. So what we've done is we've combined all of the important stuff off of a dashboard with the communication ability of a Facebook or a LinkedIn. Now, unlike those, I can't search for you. I can't say, oh, I want to be Seth's friend. know, I have to be invited into Seth's group, and this is a private, communication channel between me and my team, right? My folks that I want to do business with.
And important to point out here, not only is it private, it's got bank level security, right?
Exactly right. I mean, right now, this is being used in several banks, BMO Harris, Hills Bank out in Iowa, UMB. As soon as we get off this call, UMB out in the Midwest is looking at it. And Chase, matter of fact, Chase is in a pilot with it right now. So these are the things that, the bigger banks are going to, because they need this information inside a business owner's hand. So as I just kind of go down there, on the activity feed, what we're trying to do is detect anomalies, give you the ability to talk to each other about it. And it's target specific, which says, hey, when we've got things like unexpected bills, that's one of the cards that we're looking for. And what we do is we go back 13 months, Seth, and we go, over the last 13 months, your gas bill is usually around $450. We're going to do a rolling average and then compare it to the current bill that just came in. And I had an accountant out in, I think it was in Missouri, call me 2 weeks ago and say, Mike, this card here helped us find a water leak out in the yard. Before we probably would have. They may have had, because their typical water bill was around, we'll say $100. It started coming in at $300-400. And they may not have saw it as quickly as they did, because we said, hey, do you realize this is higher than normal? And it forced them to go kind of look for the cause. And basically that's, what we're trying to do is point out things that are different than normal with the unexpected bills. The communication hub is just like that. I can comment. I think all of us on this call understand how a Facebook style commentary looks. And then of course you got a historical timeline. Now, my favorite part right here, Seth, this is where you and I started, talking in the very beginning.
The cash flow calendar.
Cash flow calendar. Now, in flight, when I'm looking at my business, I've got 60 days of cash flow, right? So we're going out 60 days from whatever day that is. And I can click on it every single day. You can see it's kind of a heat map. All right. So do you guys see how that looks? It goes from light
the red means I might be in trouble cash flow wise.
There you go. And that's basically what we're doing is we're analyzing every single vendor and every single customer and projecting out what's coming in. And you can click on any single day, and we're going to tell you how we're getting to that calculation, that you should have this much.
Here's the question.
Yeah.
Because I live on subscriptions and I don't have AR really.
Yeah.
So does Flight analyze my typical subscription turnovers? Like, because I can have a day, like usually near the first of the month, where I have a lot of subscriptions turnover, and I can get a lot of cash in the beginning of the month, and then I have to make sure I can live on that until the next infusion, the next round of subscriptions comes in.
Well, so let me ask you, how do you classify those in QuickBooks?
Well, they're going to come in as a deposit, and they're going to actually they get imported through WebGility as a sales receipt. So they're going to ultimately get classified in as income on my profit and loss. It doesn't go through AR at all.
Okay. All right. So, but if we look back over 13 months, are they typically in the same 2 to 5 day window?
They're actually on the same exact day and time every month. Whenever the subscription was established, on that day and time, each month, that amount comes in.
That's exactly where it will be on this calendar.
Okay, so it will show up. So Flight will analyze that and say, okay, we don't have AR, but we have subscriptions there's a pattern here. It comes in.
There's a pattern. That's what we're looking for, is a pattern. So, even if it's not an invoice sitting out there, we're going to look for money going in. In banking terms, it's called sources and uses. This is a source of cash versus a use of cash. And that's the way we look at it is, listen, over 13, and we have to go back 13 months because we got some things that we pay quarterly. We got some things that you pay twice a year. Right, so we'll go back 13 months and see if there's a pattern that we can detect. Those one-ats, we're not going to be able to see those, right? If you got something that comes up and you say, well, I'm going to pay, Timmy $25 today for whatever, of course, we're not going to be able to see that. But right. What you're going to know is how much money do you have, right? Can I make that one-time purchase? Right. When we're looking at, some heavy greens, we're like going, oh, I need to buy a new computer. You're going to be able to look out here and say, well, maybe the 25th, 26th is a good time to buy it.
I see. So the darker green means I'm extra flush. So the shade even matters. The
shade matters. This is, again, I call it a heat map because this goes from dark green to bright red. Right. So, the greener, the better. And it is basically what we're saying there.
Oh, look, we just got a bunch of email notifications. That's awesome. So if I'm really screwed, does it turn like black?
Well, no, it's
All
going
of a
to
sudden,
be right there.
completely blacked out. You can't even see what the number of the day is.
Yeah, it's going to be that number right there. So that color right there. But again, you can click on any day and you'll be able to see what we think
Right.
Of how it's calculated.
So is this available now? I mean, I'm kind of trying to follow along in my version of Flight.
I took a free trial yesterday, and it linked it right up and showed it to me. The only thing I noticed, by the way, is it doesn't seem to count undeposited funds as part of cash.
Okay. Well, that's important. That's important. If you're saying it doesn't seem to, I need to.
Well, by default, a lot of people don't think of it, but it really should be treated same as cash, right? Because it is. It's money I've received that I just haven't.
Yeah, it's check sitting on your desk or something like that. Yeah. Well, Dennis, if you go to the cash, you have to go into the business. So in your account, click on businesses, and then the individual business is where it shows up. It won't show up on your main feed because your main feed for an accountant might be all of your clients. You got to pick on an individual client to see the cash flow calendar.
Okay, I'm looking at mine, and it's got like 7 pending transactions. I mean, I've had it for a while, so I guess I'm kind of beta user. So I was just wondering if it looks like you're going to try to, start charging for it pretty soon. Is that right?
That is right. And basically it's going to be $19 per month per business. If Seth actually has a promo code, I think he's going to introduce to you that gives you $5 off. So $14 per month per business.
Yeah. So might as well, now that you brought it up, the promo code is NERD. Just use the word NERD as a promo code when you sign up for Flight, and you will get $5 off your monthly fee. Is that permanent?
That's permanent, yeah.
Forever and ever. So think about what that's going to improve your cash outflows. That's going to improve which days was that with the operating expenses and the money out? What did you call it? Days on hand or something?
Yeah, days cash on hand. Yeah. There you go.
Improve your days cash on hand ratio.
I can tell you, at $14, I mean, just this here, our ability to predict. I mean, that's something I would have paid, $50 for, when I was running my business, just so I could see it rather than having to do some type of, Excel projection. I mean, it's just, we're doing it.
Well, something, I don't know if you mentioned this, Mike, because I may have been checking the Facebook feed while you did, if you did, but something that's important to note here about how Flight works is the way Flight is structured, you're going to set up a business, right? And in that business that you set up, so you might set up one for your own practice, and then you might start setting up another business for each client, and you can invite the client in. So right in the framework of Flight, where you're seeing, hey, this client is slow to pay, you can jump into that client's business and communicate with them through Flight, right? So Mike and I were talking yesterday. This might, at least partially, if not entirely, replace Slack, because you can communicate with your clients in here in a very secure environment. The only difference between this and Slack is you can't create all the channels in a workspace, but you can still have the conversations about the stuff that's relevant to what Flight is doing for you directly with the client inside of Flight. And I think that's important.
Well, yeah, I mean, absolutely, Seth. And like I said, we're focused on the business where Slack is focused on a topic or a group. But here, like we've got Buddy's Diner. If I want to communicate with him, we haven't got payment from these folks. I could simply just type in there, hey, call Wild Garden, right?
So and, how do you communicate with the client? I mean, does the client get a link so they only see their business from the dashboard?
They only see their business. All right. So Dennis, if you're looking at when you add a business,
right.
Over here you've got the manage users.
Okay.
And all you're going to do is just send them an email invitation.
Right? Mike, we had a question on Facebook. Does it work with QBO in Canada? Does it work everywhere, or just US? Or
yeah, it does work with any QBO products. All right. So here's the thing about Canada is that because we don't really deal with tax, it doesn't affect it from the Canadian version.
Okay, so that's what makes a product have trouble working with Canada is when there's tax involved.
Yeah, I mean, because the different tax structures, you got to be able to support VAT and I think there's something else. Whoever's on Facebook with you may be able to tell you, but it's the tax structure that makes it different.
Right, and also some of the nomenclature has to change because you got to once in a while you got to throw in a little A. Right?
Yeah, that's right. Yeah, or are we?
I have a question. I mean, can we have the client pay the bill? I mean, I don't want to, it can be billed at say the $14 price, or is that just?
Just use the promo code NERD and $14 to your client. You don't have to pay for your client, right? What I've got some accountants doing is just they do the value pricing and they bundle it in. They'll pay the $14, but build it into their value price.
Build it into your fee. Increase all your clients $100 a month across the board, and then say, hey, by the way, thanks for allowing me to increase the fee. Here's a great new product we're going to offer as part of our offering that's going to make life a lot easier.
So can the client get in independent of me? Say, for example, they've got, is the link permanent that I would say when I first invite them, they're going to have that link, or did they have to go through me to see the financials, or can they do that separately on their own to say 8 o'clock at night on a Sunday?
They can do it anytime they want to. Yeah, I mean, if you invite them, they're going to have all the access to their own data that they're
going to see what we see, right?
No, but I mean, it's going to be a permanent link, so they just go in, or they can just save it on their computer, the link, and then they just.
Well, it's like logging into Facebook, right? They can go anytime, day or night, log in, and they can see the activity and the feed and the updated dashboard with the cash flow projection, right?
Oh, okay, so they'll just go to the Finagraph page and log in.
Yeah, they're going to get flight,
Oh, get flight, okay.
Yeah. They go over here and just, log in or sign in, try now. The actual, it's app, finagraphflight.com. In the Google Android store, so if you've got an Android phone, it's already there. If you have an iPhone, we are still making one change, but we can invite people at a time. We haven't opened it in the store yet because the sync is wrong. When I make a change in the product in the office, there's something that we're doing wrong to sync it to the iPhone, right? So you see it immediately. Once we fix that, we'll open it up in the iPhone store as well.
Mike, on the Facebook feed from, we have two questions actually. Alexa Gregory asks, how does Flight handle transfers in QBO? She says Flight app has trouble with those.
I need more information.
Flight doesn't do transfers. It's just giving you kind of an aggregation and analysis of your cash flow picture, unless maybe Alexa's thinking of a different app. I don't know. Alexa, maybe you can clarify that question if you're still listening.
Or just contact me right after the call, and I can understand better what she's saying.
Yeah. Go ahead, Dennis.
A question I have, I have my Finagraph up, but I don't see any link on that to Flight. Is there going to be in the future going to have a direct link from Finagraph? I'm looking at the action, the name, the account, the last activity, the action, and I don't see any link to Flight on there. Yeah. Is there going to be a link there sometime?
No, all right. So right now they're currently two separate products.
Right.
And what you're going to see us do is wrap the Finagraph dashboard into Flight over the next year.
Okay.
So we're going to merge the two products over the next year.
Okay, but right now it's separate. So
yeah, they're just separate because we still got kind of a cult following on Finagraph dashboard. So we didn't want to just do away with it. We're saying no, we're going to keep it up, keep it running, but we're going to take some of the important features off the dashboard and put it into a Flight style.
Well, when I post a comment in Flight, I didn't look that deeply yet. Do I have the ability to post attachments, like screenshots and things?
Yeah. All right. So when I'm on Buddy's Diner. Yeah, Seth, that's a good thing. So you got Buddy's Diner. If I just go into the individual business, you can see right now that I'm Jen Campbell, the accountant. Mm-hmm. But now I'm talking to Buddy's Diner. I've got this thing called Documents.
Okay, so I can upload screenshots from Finagraph into Flight for now while we're waiting for the complete integration to happen.
Yeah, absolutely. I mean, you can just take that. You can put anything in here. We got, Don Brolin tells me she doesn't let anybody send her attachments and email anymore because all she does now is just click Buddy's Diner and everything she's working on with that individual is right there. She don't have to go search file folders. She don't have to go search email attachments.
So what happens when the list of documents in here gets real long? Is there a search or a filter kind of feature, or
there is? That's why we put in a tag.
Okay.
And so you can tag in anything you want to, and you'll be able to search tags in the box. Once it gets to where you can't see it, a search box will appear up here where you can just search by tag.
I see. So if the list goes beyond my screen, then a search box appears.
Yep.
Is there going to be like a sample company that you can demo to clients? Because I think it'd be an easier sell if I had some data I could show them, rather than just say, hey, go on Faith and sign up for $14 a month.
Yep. You were going to see that. You're going to see that. Yeah, you got the free trial.
So that's the best way, I think, is set it up, add the client, and then invite them in. And I'm sure if you ask nicely, Mike will extend that free trial if you need for another 14 days. Just ask nicely. And But either way, that's the best way to sell it is get the client in looking at their own real data. That's going to have the most significant impact when they're looking at it.
But Dennis, you are right. We are putting a sample company in there for everybody, and you'll be able to delete the sample company if you don't want to use it.
Cool.
That's coming this month in January.
Okay.
I just think it's more impactful when you can invite the client in and say, here's your data, right? Here's what your cat, because they can immediately see how it will actually impact their lives, right? So, all right, so we got to wrap up, but we do have a lot of people commenting on the Facebook feed, Mike, that they would love the slide deck.
Okay.
So how do people get that? Do you want to just give it to me and I'll get it to them, or do you want to give everybody your email so they can just contact you?
I sent you the deck yesterday. If you want to share it with your group, that's fine.
Okay, so everybody just get with me. If you're not, I know some people on the live Facebook feed might not be in our Facebook group. So make sure you are in Between Wall and Main Strategy Forum on Facebook. That's our group. And just either way, or just ping me on Facebook. Don't use Facebook Messenger. I'll get inundated with requests and I'll never be able to keep up with it all. So just ping me in the Facebook group or keep commenting here. I'll go through the comments and see who requested it. And what I'll probably do is just put it up in share file and post a link so people can download it, make it nice and easy.
Mike, is the URL just get flight or is it flight.com or just to go to the site?
Yeah, it's Get Flight, GET Flight. Yeah. So
Okay.
look at it right here. I think you can probably see it.
Yep, Get Flight and then promo code NERD. Make sure you put in the promo code so you get the discount.
Okay.
Okay,
All right.
so, and Seth, if anybody listening wants access to the Finograph Academy, where I've got 5 hours of in-depth, financial analysis, ratio analysis stuff that I do all over the country, just let me know. I'll give them access.
Yeah, send me the link or whatever information they need, and I'll get them out to people. So.
Okay, sounds good. Hey, I appreciate you having me on again.
Mike, thank you so much. I want to get you back on soon because I love the whole back of the napkin conversation. I really think that adds so much value for clients. And I think it would be such a valuable service for more accountants and bookkeepers to offer. In fact, I was privately chatting with somebody this morning that I'd like to have you come into my 97 and up calls, and maybe your 5-week course will work that out. I'll figure that out with you,
All right.
whatever. To have you kind of teach that. I just think it's so important and so valuable. This is the kind of stuff that, when we talk about providing strategic guidance, here's the irony. For years now, we've had our so-called thought leaders telling us, that you need to provide strategic guidance, but then there's no strategic guidance about how to provide that strategic guidance. So this is how to do it. This is the how. This is the kind of analyses that you want to be able to do. Do it yourself on your own. Make sure you understand it thoroughly so that then you can sit down with your client and walk them through it, because this is the kind of stuff that's going to make the value of what you're offering your clients go through the roof. It's going to skyrocket. Again, it's no longer about bookkeeping. We can substantially automate the bookkeeping part of things. This is the kind of stuff we need to do. This is the kind of stuff that will literally make the difference between our clients staying in business or not staying in business. Because like Mike showed us, we can give them very specific information. Here's how much cash you need to have in the bank at all times. Here's what you need to survive for the next 90 days, for the next 120 days, and so on and so forth. And here's how much you should be, or here's how much the bank would be willing to lend you based on what your balance sheet looks like today. And if you operate your business on that basis, then guess what? One of my mentors earlier on, the first thing he taught me was the key to succeeding in any business, whether it's your own or someone else's, is always having access to cash. So even if I don't think I need to borrow money from the bank today, doesn't mean I'm not going to need or want that, so that I don't have to miss an opportunity that comes up in the future, right? Not having enough cash could literally cause me to miss out on an opportunity because I don't have the cash to invest in it or do what I need to do. So the bottom line is this kind of analyses can help us in our own businesses as well as those of our clients, because we can literally advise our clients on what it takes, how they need to be positioned by looking at what's going on their balance sheet. What will it take to make sure that we can stay in business for the next 6 months to a year and beyond, as well as what would we need to have in place if the situation arose suddenly and without expectations, because that's usually when and how it happens, so that we could walk into the bank with a lot of confidence and say, hey, bank, I need a loan. Here's my information. What can you do for me, right? And of course, you go in there with a number like we discussed earlier. If our analysis says we need $68,000, you're going to go in there and say, I need a $100,000 line of credit. Here are my numbers. I know based on, because now I know how bankers think, I know based on that you should be able to give this to me no problem. And you can walk in there with that kind of confidence, and then you can probably negotiate better rates on that debt. Correct, Mike?
Absolutely right. Yeah. I mean, again, helping that banker tell the story. He's got to go sell for you, right? He's got to go into the loan committee and sell your loan, arm him with the right information.
Right. Exactly. Make his job easy, and he'll love working with you, and he'll do everything he can to get you as much money as he can, because he's going in there with the confidence. There's no question in his mind. These guys know what they're doing. They've got it all laid out. Of course, they're going to be able to pay me back. That's not even a question. The only question is how much money should we give them? Right.
That's right. That's right. That's right.
All right. That's a good note to end on. So, folks, don't forget to register for next week's Zoom In with Seth, David, and Friends. We are going to have Heather Satterley walking us through how to use Zapier to automate your business. So we talk about automating, streamline, improving our workflows. Now that we know how to get our clients more money, next we need to automate and streamline our own practices. And it ends up turning out that this is another great service you can offer to do for your clients by using a product like Zapier to automate cloud-based applications and how they talk to one another and make things happen automatically and much, much faster, so that you don't have to get the internet to go to work for you, so you don't have to do it. So we'll see you next week with Heather Satterley. Mike, thank you so much for joining us today. This has been awesome. I encourage you all, because like I said, he went through it kind of quickly because he had to. So go back, review this video, the part where Mike talked about the different numbers, the in and the out, and go through it slowly. Take a client's data and run it through that filter and practice at this, because it will be so valuable for you if you do. And Mike, I'm excited. We'll have you back soon, and we'll maybe go more in depth on some of this stuff.
Yeah, let's do that. I'm looking forward to it. Thanks, Seth.
All right, we'd love to. Looking forward. And don't forget, Gina has her hangout later today, 2:30 Eastern, 5:30 Pacific. Just search her out on Facebook. Small Business Accounting Advisors on Facebook. Join the group, join the webinar. It's always good.
Thank you, Seth.
You got it.
Bye, everyone.
Bye.
Bye, everybody.
Bye now.